Get ready, crypto fans. The market is hotter than ever, and we've got the inside scoop on moves that could shake things up. From massive whale activity to critical legal developments and bold institutional plays, the pace of change is relentless. You need to know what's happening now to stay ahead of the curve. We're diving deep into the stories that matter, the ones that will define the next phase of digital assets. Don't blink, because you might miss the next big opportunity. The landscape is shifting, and staying informed is your ultimate advantage. Let's jump right into the action and break down the critical updates you can't afford to miss. We've got a packed show, so buckle up and let's get started. First up, we're tracking a colossal Bitcoin whale that's making waves by strategically offloading a significant chunk of its holdings. This isn't just any investor. We're talking about someone with billions on the line, and their latest move involves a massive swap that could have ripple effects across the entire ecosystem. What does this mean for Bitcoin's price, and where is this capital flowing next? We've got all the details as this whale aggressively shifts its portfolio, creating a buzz that you won't want to miss. Then, we're shifting gears to the corporate world, where a major legal battle involving a prominent crypto company has just seen a dramatic turn. A significant lawsuit that cast a shadow over the industry has been dismissed. But what does this mean for the broader implications of crypto adoption in corporate treasuries? We'll explore the fallout, the lingering questions about regulation, and how this impacts the hundreds of companies now holding billions in digital assets. It's a complex story, with far-reaching consequences for how businesses operate in this new financial frontier. Next, we're diving into a fascinating strategic maneuver happening on the other side of the globe, specifically in Europe. A key player is making a calculated move to establish a dominant position in institutional Bitcoin reserves. This is about more than just holding assets. It's a play for long-term influence and control in a rapidly evolving market. We'll unpack the specifics of this strategic alliance and what it signals for the future of mainstream Bitcoin adoption. Get ready for some high-level insights that could redefine the institutional landscape. And finally, we're wrapping up with a look at the sheer scale of corporate Bitcoin adoption. We'll break down the numbers and the trends that show just how deeply digital assets are being integrated into mainstream business. It's a powerful indicator of where the market is heading, and we've got the essential analysis. Stick around, because you won't want to miss any of these critical updates. Make sure you hit that like button, subscribe to the channel, and ring that notification bell so you never miss a beat. Massive whale makes major moves. In a development sending ripples through the cryptocurrency markets, a significant Bitcoin whale, reportedly holding over $5 billion in BTC, has been observed executing a massive strategy shift. Data from Network Block Explorer Hyperscan reveals that this large holder deposited approximately 2,000 Bitcoin, valued at over $216 million, onto the Hyperliquid exchange. What's particularly noteworthy is the method of this divestment. The whale systematically sold these Bitcoin holdings, converting them into Ethereum. The address, identified as ending in ECB43, initiated the process by receiving 1,000 BTC, around $108 million, in two separate transactions. Following this, the account began a meticulous process of selling small batches of Bitcoin, typically between 1 to 1.5 BTC at a time, and simultaneously acquiring an equivalent amount of Ether. This pattern continued until the entire Bitcoin deposit was depleted. The whale then proceeded to deposit another 1,000 BTC, repeating the same selling strategy before ultimately transferring all the acquired Ethereum, exceeding 42,750 ETH, out of its wallet. On-chain analytics firm Arkham Intelligence has linked this particular address to a network of wallets collectively managing an estimated $5 billion in Bitcoin. Notably, the same network was responsible for depositing at least $800 million worth of Bitcoin to Hyperunit on August 24th. Hyperunit serves as a platform facilitating the deposit and trading of native tokens like Bitcoin and Ethereum on Hyperliquid. Arkham Intelligence highlighted this activity on X, stating, "A whale holding over $5 billion of BTC is currently buying ETH. He just moved $1.1 billion of BTC to a new wallet and has started purchasing ETH through Hyperunit/HL." They further commented, This whale bought $2.5 billion of ETH last week, and he's still buying. This activity follows a trend observed last week, where a similar Bitcoin whale swapped BTC for a leveraged $75 million worth of long positions in ETH, indicating a sustained strategic pivot towards Ethereum among major holders. The broader Bitcoin whale ecosystem has been increasingly active, with one notable Bitcoin billionaire recently executing the largest transfer of old BTC, coins that have remained untouched for a decade, in history, moving over $8 billion worth. This same, OG, investor later cashed out more than $9 billion in Bitcoin, selling over 80,000 BTC acquired during the Satoshi era through the crypto asset firm Galaxy Digital. This significant capital movement from a major Bitcoin holder into Ethereum signifies a potential shift in market sentiment and investment strategy. The direct conversion of such a substantial amount of Bitcoin into Ethereum suggests a belief in Ethereum's future performance or a strategic rebalancing of portfolios. The market is closely watching these large-scale transactions for any indication of broader trends or potential price impacts on both major cryptocurrencies. The sheer volume and systematic nature of these trades underscore the influence that whales can wield in the digital asset space, often setting precedents or signaling market sentiment to smaller investors. Hold on tight, the market's never static. Next, we're dissecting a major legal win that could reshape corporate crypto strategies. Lawsuit dismissed, but crypto risks linger. In a significant development for corporate digital asset adoption, investors have voluntarily dismissed a high-profile lawsuit against a prominent crypto company, ending legal proceedings related to a substantial $6 billion Bitcoin loss. The case, initially filed in May, accused company executives of failing to disclose the full impact of the Financial Accounting Standards Board's FASB, ASU 2020-308 on its financial disclosures, which led to a significant unrealized loss in the first quarter of 2025. The lawsuit centered on the company's decision to adopt new accounting rules that require the recognition of tax liabilities related to unrealized gains on its Bitcoin holdings, a move that drew criticism from investors concerned about transparency and the management of digital assets. The dismissal, filed with prejudice in a federal court in Virginia, effectively closes this chapter of legal scrutiny. However, the underlying issues highlighted by the lawsuit remain relevant as the trend of corporate treasury adoption of Bitcoin continues to accelerate. Currently, over 150 publicly traded companies hold nearly 1 million Bitcoin, collectively valued at over $110 billion. This widespread adoption, exemplified by companies like Strategy, Japan's MetaPlanet, and Canada's CEA Industries, signifies a growing comfort with integrating cryptocurrencies into mainstream financial strategies. Yet, this expansion also introduces a new spectrum of litigation risks. Legal experts caution that the increasing number of companies holding significant crypto treasuries could lead to a rise in securities class actions and other enforcement actions, particularly as firms navigate the complex and evolving landscape of crypto accounting and regulation. The case against the company specifically focused on a $5.9 billion unrealized loss attributed to the new accounting standards, which became a focal point for shareholder dissatisfaction. These developments underscore the increasing legal and regulatory complexities that companies face when managing volatile digital assets on their balance sheets. While the dismissal of this particular lawsuit provides a temporary reprieve, it does not eliminate the potential for future legal challenges. The broader adoption of crypto treasuries is expected to face continued regulatory and legal review as more companies enter the market and authorities refine their oversight. The situation serves as a stark reminder of the difficulties in applying traditional financial regulations to the dynamic world of cryptocurrency investments. The core challenge remains for companies to ensure robust transparency, accurate risk disclosure, and adherence to fiduciary duties when incorporating digital assets into their treasury operations. The legal landscape for corporate crypto adoption is still nascent, and companies must remain vigilant in their compliance and communication strategies to mitigate potential future liabilities. While legal battles resolve, strategic plays are heating up overseas. Next, we're heading to Europe to uncover a major institutional Bitcoin push. European institutions' iBitcoin dominance. A significant strategic play is unfolding in Europe as institutional players are making calculated moves to establish a dominant position in Bitcoin treasury reserves. This initiative, spearheaded by entities like AMBTS, is not merely about asset acquisition, but represents a concerted effort to secure long-term influence and control within the evolving institutional landscape of digital assets. The emergence of these European reserves signals a maturing market where traditional finance is increasingly embracing Bitcoin as a core component of its reserve strategy. AMBTS, a key player in this movement, is reportedly forging strategic alliances and developing infrastructure designed to facilitate large-scale Bitcoin adoption by European institutions. This includes working with regulatory bodies to ensure compliance and building trust through transparent and secure custody solutions. The goal is to position Bitcoin as a reliable and valuable asset within the traditional financial system, akin to gold or other reserve currencies. This strategic approach aims to de-risk Bitcoin investment for institutional investors by providing robust frameworks for management and oversight. The emphasis on reserves suggests a long-term outlook, where Bitcoin is seen not just as a speculative asset, but as a fundamental store of value and a hedge against economic uncertainty. The broader implications of this European push are substantial. It could lead to a significant increase in demand for Bitcoin from a new class of institutional investors, potentially driving up its value and solidifying its position in the global financial order. Furthermore, it could influence regulatory frameworks across other regions, as successful institutional adoption in Europe might serve as a blueprint for other markets. The strategic play involves not only capital deployment, but also the development of sophisticated financial products and services tailored to institutional needs, such as derivatives, lending, and custody solutions that meet stringent regulatory requirements. This comprehensive approach is crucial for building a sustainable ecosystem that can support widespread institutional Bitcoin adoption. This concerted effort by European institutions highlights a growing recognition of Bitcoin's potential beyond its early adoption phase. It represents a shift from a niche asset class to a mainstream financial instrument, driven by the pursuit of diversification, inflation hedging, and yield generation opportunities. The success of these initiatives could significantly accelerate the mainstream adoption of cryptocurrencies, paving the way for wider acceptance and integration into global financial markets. The strategic positioning of Bitcoin reserves in Europe is a testament to its increasing legitimacy and its potential to reshape the future of finance. The commitment from these institutions underscores a strong belief in Bitcoin's long-term value proposition and its role in the future financial landscape. The institutional tide is rising, and the numbers are staggering. Next, we'll break down the full scale of corporate Bitcoin adoption and what it means for you. Corporate Bitcoin holdings skyrocket. The integration of Bitcoin into corporate treasuries is reaching unprecedented levels, with over 152 publicly traded companies now holding nearly 1 million Bitcoin, collectively valued at an astonishing $110 billion. This remarkable surge in corporate adoption signifies a profound shift in how businesses view and utilize digital assets, marking Bitcoin's transition from a speculative investment to a strategic financial tool. Companies across various sectors, from tech giants to traditional industries, are increasingly allocating significant portions of their balance sheets to Bitcoin. This trend is driven by a confluence of factors, including the search for inflation hedges, diversification of assets, and a growing belief in Bitcoin's long-term store of value proposition. Firms like Strategy Inc., a prominent Bitcoin-focused company, have led the charge, with substantial holdings that often influence market sentiment. Other notable participants include Japan's Meta Planet, which has aggressively pivoted to a Bitcoin-centric strategy, and Canada's CEA Industries, a vape manufacturer that has also made significant Bitcoin acquisitions. These diverse examples illustrate the broad appeal and growing acceptance of Bitcoin across different business models and geographies. The sheer scale of corporate Bitcoin reserves raises significant implications for the broader financial ecosystem. It not only drives demand for Bitcoin, but also influences regulatory discussions and the development of financial infrastructure. As more companies adopt Bitcoin, there is a growing need for robust regulatory frameworks, secure custody solutions, and sophisticated financial products that cater to institutional needs. This increasing institutionalization of Bitcoin is a critical factor in its maturation as an asset class, potentially leading to greater price stability and wider market acceptance. However, this rapid adoption is not without its challenges. Companies venturing into crypto treasuries face complex accounting standards, evolving regulatory landscapes, and the inherent volatility of digital assets. As highlighted by recent legal developments, transparency in reporting, accurate risk disclosure, and sound corporate governance are paramount. The litigation risks, though sometimes dismissed in specific cases, remain a pertinent concern for the industry. Legal experts continue to warn of potential securities class actions and increased regulatory scrutiny as companies navigate these uncharted territories. The balance between innovation and compliance will be crucial for sustained institutional growth. Despite these challenges, the momentum behind corporate Bitcoin adoption appears unstoppable. The $110 billion in corporate-held Bitcoin represents a powerful endorsement of the digital asset's potential and its growing role in the global economy. As more companies explore and implement Bitcoin treasury strategies, the digital asset is poised to become an even more integral part of the mainstream financial system. This trend underscores a fundamental shift in corporate finance, where digital assets are no longer on the periphery, but are becoming central to strategic financial planning and asset management. The ongoing evolution of corporate crypto treasuries will undoubtedly be a key narrative in the digital asset space for the foreseeable future. That's a wrap on today's critical updates. We've seen whales moving, lawsuits settling, and institutions making bold plays. Stay tuned for a quick recap and how you can stay connected. And that's a wrap on today's essential updates. We saw a massive Bitcoin whale strategically swapping billions into Ethereum, a major lawsuit dismissed, but corporate crypto risks remain, European institutions making a strategic play for Bitcoin reserves, and corporate Bitcoin holdings soaring past 150 companies and $110 billion. Don't miss out on future market-moving news. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell, and share your thoughts in the comments below. For more insights and to join the conversation, follow us on all our social media channels. Thanks for watching, and we'll see you in the next one.